Hello everyone, it's Binance, and today we're going to fly through the Bitcoin, Cardano, and Ethereum charts, and at the end I'm going to give you some crazy fundamental news about Bitcoin. So stay tuned and make sure you watch this all the way to the end. Let's go. As you know, if you've been following the channel, we were worried about this M pattern forming and breaking towards the downside. Well guys, luckily this M pattern has been completely invalidated because the chart has moved on towards the right. So let's get rid of these very nasty lines. So as you can see, that leaves us with this falling wedge, which has a price target of this line, which is approximately $61,600 US. Now, we are starting to go back up towards it, but we haven't gotten there yet. And remember guys, that this line is going to act as a resistance point. So the second that we go up here, well, we're probably going to be bouncing around here for a little while before going back into this wedge, and I really hope that we don't break down again, because if we do break down again and we close below this, well, then I do believe that the bear pattern for this wedge has been formed, which would have a price target of about 17,000 US dollars. However, guys, even with such a crazy low price target, we have a lot of resistance levels on the way down. So I don't think that we will be hitting 17,000. So we're good there, even if the bearish pattern starts forming. So short term for Bitcoin, we're looking at 62,000 US dollars. If you want to look for more confluence in the chart, well, there is this head and shoulders pattern here. And if we take the price target of this one very quickly and we put this right where it was breaking out, well, we do see that this pattern also has a price target of about 63,000. So this one was 62,000, this one is 63,000. Split the difference and we end up with 62,500 is going to be the short-term price range that we're expecting for Bitcoin in the short term. On the Ethereum chart, we as well have this inverse head and shoulders pattern forming, and the price target of that would be taking us once again near the all-time high to about 1,950 US dollars. And I do still believe that this pattern is valid, and we are probably going to continue going up towards the top throughout this week. That would still be a measured price move from the bottom of the pattern of approximately 12%, and from where we are now of approximately 8%. Moving on then to Cardano, we see that we have been very busy in the Cardano charts lately, and well, we have started to break out here, and we had kind of a bull flag pattern forming, but this section was way too long, so we had a small breakout here towards the upside, and now I do see another pattern starting to form here. But guys, we do need to be patient on the Cardano chart, because at the moment it seems like there's something forming, but we're not sure what yet. So there could be kind of a W pattern forming, which would be very nice if Cardano were to W towards the upside, right? Or we do start to see a bit of a rising channel forming here, so we would have to wait and see what happens here. But basically, it's very difficult to get a price target from rising channels. It's basically only going to be an indicator of like a violent breakout towards the top or towards the bottom, depending on what exactly happens. So in the Cardano charts, we are currently after this pattern, and the new pattern is starting to form, guys. There's something happening here, but we need to be patient. Now, let me go back to the Bitcoin charts and show you something on the EMA ribbons. So what's this cool little ribbon that I have here? Well, this is the EMA ribbon, and I've plotted it for the 13, 20, 25, 30, 35, 40, 45, and 50 day period. And the EMA ribbon is just the moving average for the current past, well, however many days you want. So what I wanted to show you is that every single time, this yellow line represents the 13-day moving average, and the bottom line represents the 50-day moving average. And guys, every time that the 13-day moving average has dropped below the 50-day moving average, well, we have entered a bear cycle. And every time that this 13-day EMA flips back up over the 50-day, well, then we are entering once again a bull cycle. Here you see again 13 flips below the 50. Here you see again the 13 flips above the 50. We entered a bull run again. Again, it flipped below somewhere around here. We entered a bear run. And guys, what I wanted to show you is that in the past couple of days, we have now officially gone above again what the 13-day EMA, and this is an exceptionally bullish sign for Bitcoin. If we go even further back, right, well, this pattern has maintained itself for a very long time. Even if we go back, I don't know, let's go to February 2020. Well, what happened here? The 13-day EMA flipped above the 50 days, somewhere around here, and, well, of course, we entered a massive bull cycle. Then, here, the 13-day EMA flipped below the 50-day EMA, and we entered a massive bear run. And if you guys want to go back even further, you're more than welcome to do that. But this pattern is quite consistent over time if you plot the correct EMA ribbon days. So guys, this is actually an exceptionally bullish sign that we see right now, and that's why I've been so bullish today in the charts, because the 13-day EMA has once again crossed up and above the 50-day EMA, and it's doing so quite significantly. So guys, that's going to be everything in the charts for today, but I'm about to share with you a bunch of fundamental news for Bitcoin, which is also exceptionally positive. So please watch this. It's going to be very interesting. And we're going to start by talking about what is happening in the poor regions of Turkey with the Turkish lira. As you may know, a couple of weeks ago, well, the Turkish lira plunged 15% overnight to its historic low. That means the value of their currency dropped by 15% in one night. Guys, that's crazy. And well, Turkey has been suffering with quite high inflation for a while. And what happened then is that in the poorer regions of Turkey, the interest in Bitcoin has surged 566%. If you guys watched any of my videos where I talked about inflation and how it's changing in the developed versus the undeveloped world, well, you would know that in the undeveloped countries, inflation is starting to show and it's starting to be a problem. And that's why if you do live in one of these countries, it's even more important to start buying Bitcoin right now rather than in the West, where probably still for the next 10 years, we're going to be at pretty low levels of inflation. But like I said, you can only run from the truth for so long, and the truth is that underdeveloped countries are experiencing higher and higher levels of inflation, and we see now that the people who are suffering the most from this are starting to run towards Bitcoin. The second piece of news I wanted to share with you, and I might have shared it earlier, I'm not sure, is the reserve risk. And what this measures is pretty much just the amount of Bitcoin price is up here, and this yellow line here is called the reserve risk. So it's very simple. Let's say you buy something for $10 and it goes up to $100. Well, the difference there is $90 of gains that you're just risking and not capturing. So your risk reserve ratio there would be something like 10 to 1, right? Because you're risking 10 times more than what you put in. Well, that's exactly what's happening here. And historically, this ratio tends to top out in the bull markets at about 0.02, and currently we're at 0.008. I'm sorry, this image is quite blurry, but we are currently at around 0.008, guys. That means we still have a bunch of run-up left in this bull cycle according to the reserve risk, because the people who are holding Bitcoin for the longest aren't incentivized yet to start selling. Just the reserve risk isn't high enough. Then, guys, I want to talk about the Bitcoin drawdowns. And what a drawdown is basically just a time where the chart enters a bear cycle, right? So a drawdown is literally when the price goes down. And what this chart shows is that over time, these drawdowns are getting less and less severe. Guys, it's really hard for you guys to see this chart. All right, let me just flip the camera around. So what that chart shows is on one axis, how long the drawdown lasts, right? So how many days, weeks, maybe even months we are in a bear cycle for. And on the other axis, it shows what the magnitude of the drawdown is. So did we go down 10%, 20%, 30%? And guys, if you look at the chart, as time goes on, the size of the drawdowns is getting smaller and the duration of the drawdowns is also getting smaller. It means that the bears are starting to run out of steam and the bulls are coming back into action. So that these drawdowns are getting smaller and lasting for less time is actually once again a very bullish sign. And then the last bit of news I wanted to share you guys is kind of funny, but I think it just shows that the mainstream adoption of cryptocurrencies and the technologies of them is continuing to grow faster and faster and faster. You guys might know Time Magazine. Well, Time Magazine has started to accept cryptocurrency for its subscriptions, and it's going to start to release every single magazine cover as an NFT, which is pretty interesting. If you want to know more about NFTs, make sure to click that in the suggested videos at the end of the videos. And guys, with that said, thank you so much for watching. If you like this video, please go ahead and hit the like button so YouTube knows that this is valuable content to share with more people. And if you got smarter with me and you want more videos like this in the future, make sure to smash that subscribe button and hit the notification bell. Thank you guys so much for watching. See you in the next one. Bye!